All right, let's begin. Good morning, Checkmate crew. Today is Tuesday, December 13th, 2022. It's 30 minutes after the opening bell of the New York Stock Exchange, 10 a.m. Eastern Time. Yours truly, Mickey Blindside here with your market memo. Okay, so today we had the CPI inflation numbers come out, and wow, we're seeing one heck of a reaction to the market. We're up, I think, on the S&P 500, we're up over 2.5%. VIX is down about 11% or so. So the core CPI came out to be about 6%. Headline coming in at 7.1%, which is the smallest 12-month increase since the end of last December. So the markets are taking it very positively. And I did see the breakdown of this. We're actually seeing some, medical care services. A lot of the services, all right, like shelter, it's starting to slow down finally. We also had the first month where shelter is decreasing and not just increasing. It did decrease a little bit, but I mean I think this is just maybe a rounding error or something. But I think this is finally showing the trend that yes, inflation is cooling down. Now we talked about this since the summer. Remember when TIP-TLT, when it kind of it started forming that box back in June, July? We talked about this. We talked about actually, let's go to that. Yeah, we anticipated this. Remember, CPI data is about 6 months lagging. All right. So for those of us that know, this was not a surprise that we were going to see some low prints. I warned you guys that we were going to see that. And so hopefully you guys were patient in your U.S. indices puts. Some of you guys, I saw that jumped the gun on some of those puts and started buying before today. If you did, you probably woke up to a rude awakening. But we saw TIP-TLT, which is our forward-looking inflation indicator. Remember, it formed that box back in May and June, and right here I said, hey, this is likely a top. Or not a top, but this is likely a signal that 6 months down the road, we're going to see the CPI come down. Okay, we're going to see the CPI level off and come down. And lo and behold, look at that. 6 months, right? It started around last month. So again, it lags about 5 or 6 months. We also saw broad commodities also slow down their rally, and we also see it top around June. All right, remember when all those commodities topped around June? What is it? Wheat around May, June. Also, when it comes to energy costs, same thing. Around June, it topped off. So we anticipated this. We saw this coming, and shouldn't be a surprise to most people, to us at least. So that's the CPI number. I do think that we're going to see another drop next month. Okay, we're probably going to see another drop, maybe into the 6s and 5s next month. Now, after that, I'm not sure what happens. Okay, I don't know what the numbers are going to look like then, but I think for the next one or two, definitely one. I don't know about two, but definitely the next one is going to be low as well. So we will act accordingly. Now, tomorrow is FOMC. Okay, so the Federal Reserve will meet. And we'll see what the reaction is on the market. It doesn't have to keep going up, even if, all the expectations are for a 50 basis point rate hike. All right, that is the expectation based on the Fed funds market and the Fed funds futures market. A lot of institutions participate in what they think the Fed funds is going to be, and it tends to do that. Okay, and so right now there's about 80% chance that it's going to be a 50 basis point rate hike tomorrow. Okay, rather than a 75 basis point rate hike. We will see what happens. I mean, I'm wondering if this changed at all today. With the CPI numbers that came out. So, oh, look at that. Whoa, that's a huge change. So in one day after the CPI report comes out now for February, which is, after tomorrow's FOMC, the next one is the February one. The market is only pricing in, the market is only pricing in a 25 basis point rate hike. So it looks like the market is pricing in slower rate hikes, another 25 basis points in March. All right. And then it levels off at 5, it looks like. Yep, it levels off at 5. It was at 525 or so, maybe a couple weeks back, but now it's leveling off at 5 and then potentially a rate cut in September or November. Okay? So that's what the Fed funds futures market is saying right now. So we shall see what happens tomorrow. Okay. Even though the 50 basis point rate hike is priced in, who knows? If Powell says something at the press conference, the stocks could sell off. All right. But I remember in a speech that he made a couple of weeks back, he did use the word moderation. That was like the huge takeaway from his speech. He kept saying the word moderation, that they were going to tighten, but they understood that all of these effects are lagging, so they were going to start exercising moderation. All right. Will he change his tune again? Who knows? Okay. If he does, I think that's going to ruin what little Fed credibility is left, but he might, you never know. So, again, gambling money on what the Fed is going to do is a fool's game. So, it's best to sit out. Okay, the opportunities will present itself. I do think that after these big moves, we'll start seeing some trends. Either we'll see a trend down or trend back down, and the longer term trend exert itself, or we might see a trend change. But either way, we're gonna wait for confirmation, and there will be a trade that comes up after that. Okay, so there's no need to jump in when it's all uncertain right now. Okay, at least in my view. Of course, you guys can do whatever you guys choose. But we did make some changes to our trades. I just wanted to go over that. First of all, let me tell you, I did a whole master class on what not to do with Matson. We went long, remember, at around 61, 62 with those calls. So basically I FOMO'd into Matson X. Okay, so I wasn't even supposed to get into this name. Remember our tanker thesis was that oil tankers and gas tankers, those energy tankers, will be able to command a higher rate. Well, those names weren't pulling back far enough, and I started looking at other shipping names, and this is more of a generic dry shipper, and I said I was only going to do an entry size position on this, and then the rest of it I'll wait. That was just stories I told myself, that I shouldn't have even entered this trade to begin with. Yesterday I got out at a small loss. It was like 5% or so, but today it's up. If I had held it till today, I would have made 10%. What's the moral of the story here? It's not that a fact that I got out too early. That was not the mistake, although that it does look like a mistake right now. But the big mistake was I shouldn't have even entered this to begin with. That's what I get. Now, fortunately for me, I kept it very small, one contract as my entry point. I always like to, I was going to keep shipping to about maybe 5 to 7% of my speculative account. So usually when I do that, I'd like to always double up as I enter into a trade. So if I set a max cap of 5% of my account into one type of theme or one trade, I'll usually start with like 0.5%, right? 0.5%, and then I can double up, and then I'll have 1%, and then from there I'll double up again. Then I'm at 2%, and then from there I can either split it into 1.5, or just double it and just get to 4. And then put another 2 and then make it into 6 or something like that. So I like to leg in like 3 to 5 times into a trade, especially if it's something longer dated where I have like a year long or 2 year long thesis at least to it. If it's like a swing trade where I'm just doing it for 3 to 6 months, I may only leg in like 2 or 3 times. But if it's something that's a little bit more longer thesis, I may leg in smaller pieces, but more frequency. So again, in that example, I was, in my head, what I was planning on was doing 0.5% first, doubling it up to 1, then doubling up to 2, and then doing 2 more buys after that, 2% to make it around 6. That was my plan. I only did the initial 0.5%, and then I just got out of it yesterday in light of CPI report coming out today. I thought, what if I'm wrong? What if CPI report comes out a little bit higher than expected? Or what if the market already expected a lower CPI? It wasn't much lower than what the expectation was, and so then the market sells off. It's kind of like buy the rumor, sell the news event. What if it was that, right? So that's why I protected. I didn't want that headache, but it seems like I should have just held on. It is what it is. I'm just glad I'm out of that. I'm waiting for the real names. Again, the tankers, I should have been patient to begin with. I'm still waiting for FLNG, FRO, and STNG. It's those 3 names. Those are the big energy tanker names I want to get into. I'm not going to play games and start cutting corners. Patience and discipline. I keep saying that to myself, but I also sometimes need to remind myself sometimes, even even professional traders, they sometimes need this reminder. A lot of us think trading is you versus the market, but it's not. It's really you versus yourself, okay? It's that human element, okay? So I'm going to be patient. I'm going to exercise some discipline. We are going to be more judicious on what we choose to trade, okay? So anyway, I did enter another trade, XOP. On this bump in this market, I did get into an XOP short that you guys can see right here. XOP right here. This is the XOP trade, 131, 121 puts. It's a put vertical debit spread. I got in at 250. I got a 3-to-1 reward to risk ratio for January. The reason why I chose this, we talked about this before, and if you click on the top right, I'll have some links. Click that exclamation point, and I'll have some links to our past videos. But we talked about tax loss harvesting, right? Tax loss harvesting. And so for the past few sessions, a couple of weeks, I've been noticing certain big block trades. Remember, we saw some block trades, some oil and semiconductor pair trades, where the biggest winners and the biggest losers were being sold off at the same time. That's tax loss harvesting that the institutions are doing. And so I saw some big institutional block sells on some of these XLE and XOP components. And so right here, that 139, 140 zone was where I saw a lot of sell orders and block trades in those components. And so that was my kind of cue that if we get back up there again, we might see that institutional selling also continue. And I took that trade. I think it's a good R to R. If we close over the week over 140, that's my cue to get out. Okay, so even if I'm wrong, the loss will be somewhat small. We know when we're right, and we know when we're going to be wrong. We're going to know pretty quickly if we're wrong. Okay, so I like my reward to risk on this. Also, too, with the crack spread, we talked about this too in oil. Right now with the crack spread going down, the diesel and gasoline prices, although it is rebounding a little bit, I do think that we're in a downtrend now in gasoline, at least for maybe next few weeks, next couple of weeks. And when the crack spread narrows, the difference between the distillates and then the cost of buying that crude, when that narrows, the economics of refiners buying oil to sell these products, it's just not there anymore, okay? It just becomes less profitable to do so. And with all the inventory that a lot of these refineries have, they may start shorting futures to hedge all that inventory that they have. So I think it goes along with that thesis. So the pair of those theses kind of makes the XOP short, I think, pretty good reward to risk. So I'm in it. January's 131, 121 put vertical spreads at 250, 3-to-1 reward to risk ratio, long the 131 put, short the 121 put, and we'll see. Okay, we'll see what happens. If it gets back to the lows that it had just a couple days ago, and it overshoots it just a little bit, I'm going to be close to full profit on those. So that would be a pretty pretty decent win. Okay. All right. And so let's also, so those are the position changes. Okay, so let's take a look at, also the market's reaction of what's going on. Again, we're seeing, all right, we're seeing the markets really rally on this. Could an exhaustion signal form? It could. I mean, already right now on the SPX at least, maybe not so much on the ES futures contract, but at least on the S&P 500, we are seeing, all right, we're actually seeing, what is it? An exhaustion signal form. And if we end up actually red for the day, that could be interesting. And then if it gaps down tomorrow, and then perhaps up to the Fed meeting, maybe it keeps going down, that would that would be a signal that that perhaps that is a top. And I think a lot of people who buy are going to get trapped there. Possible. Okay, possible. All right, we'll see. Now, as far as delta options positioning is concerned, we are over delta neutral. Okay, we gapped up over delta neutral. Delta neutral was around 4,000 to 4,100. Okay, so we gapped over that, or I would say closer to 40.50 or so. We gapped over that, and then if we still, if we just get back below it, we might see some continued selling. Okay, so we gapped over that delta neutral, and now the options positioning is a little bit bearish, and we may see people sell calls, and that could send the markets down. When the market participants are selling calls, the market maker has to buy those calls, which is a bullish position. So in order to even out their books, they're going to have to short the underlying to remain delta neutral. Okay, so that's kind of the mechanics of that. All right, we'll see if the VIX goes up. The VIX actually collapsed after that report. Some of you guys, and I know some of you members. I'm not going to mention names, but some of you guys went long on UVXY. Okay, shame on you. Shame on you if you went long UVXY. I mean, look at the long-term chart of UVXY. UVXY is something that you don't go long, especially when there is contango, okay? When the front month, all right, is lower than the second month, that roll into the more expensive contract causes this decay or over time, okay? Definitely the math is not in your favor when you go long UVXY or any type of VIX ETF or VIX futures ETF when there's contango, or any ETF for that matter that uses a futures rolling strategy. You don't want to be long when there's contango, okay? And this is what happens. I mean, the VIX futures dropped, but then you're also adding even more pressure because of that contango. All right. Could it spike up from here? It could. But what a drawdown you guys would be holding. So again, there's better ways to express negative delta on risk assets. Okay, you can use put spreads. You can use there's way better ways of doing this. Okay, not going long on something like this. Okay, but maybe it's time for you guys to manage some risk if you guys went long on this. Again, I do not recommend ever going on long on this when there's contango, okay? Or just ever in general. Just the math is just not in your favor for going long on this, okay? This thing decays over long periods of time, okay? What else are we looking at today, okay? The dollar did collapse as well. All right, let's just take a look at the dollar. All right, dollar is falling. These red dashed lines are where the 2-week standard deviation, the weekly 2 standard deviation Bollinger Bands are. So it looks like the dollar wants to visit there and possibly come back, possibly not. We'll see. Okay, it could be the case. We also, I do think that it does bounce. I mean, we do have those hedges, those UUP hedges. They're not doing so well right now, but those are hedges on our existing positions because of the quad U that we have and all those metal miners that we want to get into. But the dollar does look as if it does want to keep going down, doesn't it? It does look like it's still maintaining like a daily downtrend. We will see on the weekly chart at least. I think if it can bounce from here, I think it can still maintain that trend. Okay, I don't think that it's gonna go back to the highs for the year in one swift move. I do think that it's gonna probably make a higher low. I'm sorry, a lower high. It's going to make a lower high on the weekly chart and come down. That's what I think. And that's where I'm going to take profits on my UUP. I mean, who knows? If on the weekly basis, if we do close under this zone, under the 2 standard deviation Bollinger Band on the weekly chart, I'm just going to get out of those hedges. I'll just get out, okay? It'll be a very small loss. Those are for January 2024. So the gamma, there's not much of a gamma on there. So we should be fine. We should be able to just exit at a small loss if the dollar closes beneath the 2 standard deviation weekly Bollinger Band. Okay, so that's kind of my managing risk level at that point. Speaking of which, what's going on with some of our other names that we want to get into? Oh, it looks like some of the tankers are falling back down. So good. Okay, so maybe we do get an opportunity to get into the tankers. I'm curious actually how Nat Gas is doing. I know there's been a lot of interest on the Discord about natural gas. Oof, look at that. Natural gas up 7%. I mean, those of you who got into Boyle, I mean, I was waiting on a pullback, but you guys, if you chased, you did well. So congratulations to those who chased. You guys are probably good for you guys. I didn't, so it is what it is. On the next pullback, maybe the market will be polite enough to give me a pullback, but it doesn't have to. If natural gas can come back, maybe fill this gap or something, maybe if it goes to like 630 or so, maybe I'll attempt a long, and I'll use Boyle calls or something. Maybe a call spread or something like that. It should probably come down to like, if that happens, probably will be like 34, 35-ish. We'll see. Okay. If it happens, great. If not, we'll move on to the next trade. Speaking of which, if you noticed, I don't know if you guys noticed, but I noticed that crypto, the Ethereum, wow, actually today when I checked in the morning, this was 5 billion. So remember how it was 4.5 billion a few weeks ago, and I said, we're not going to check this until it gets to closer to 5.5 or 6. So after the CPI report, the notional value of the open interest on Ethereum options chain went up $300 million. So there's more trades coming in. It must be December, and it's mostly for December. Let's actually take a look and see. Let's refresh this and see. Yeah, December. So it looks like mostly for December, it's coming in. We're seeing calls. I think it's mostly calls getting bought. So perhaps risk on. It could be a risk on signal or risk on sentiment at least for some of these options traders. There must be a lot of traffic coming in. So now Deribit's not working. Let's see if there's any big block trades. I did notice one block trade. It was a put sell early in the morning. Yeah, somebody sold puts. The 1900 puts. I'm not sure if that's part of a spread or not. I looked back a couple of pages and I couldn't see anything that had the same timestamp. Or they could have split the order. It could be. But we're starting to see some larger trades come back. I mean, 6 figures really isn't all that much. It could just be somebody in their mom's basement. But for crypto, at least for Ethereum options, once we start seeing these series of 6-figure trades, we start seeing those 7-figure trades, and then we start seeing those the open interest go up. So we might be seeing the options market exert itself on the price of crypto again pretty soon. Somebody here, one of our crypto experts here at our Discord channel, they mentioned that there is some Ethereum event coming up where you can now withdraw staked ETH, and that's supposed to come out sometime in March, I believe. So that may explain why there's some March contracts. Although I did notice in the last 24 hours or so, some March OI went away, but December got added on. But still, it's one of the major open interests that are out there is for March. I believe it's December's the biggest, and then March is the second biggest. Yeah, so perhaps people are setting themselves up for that already. We saw that for the when Ethereum became proof of stake, when that merge happened, we saw all that open interest pile on, and then everybody, just cashed out of their options right after that event. Will we see something like that on this event? We could. Okay, we could. So it'll be quite interesting to see the buildup in options, open interest in options again, and maybe it'll give us some good day trading signals, just like it did back in August, September. So we'll see. Okay, we'll see, guys. But it is increasing. It is increasing. Okay, so I noticed that. So I just wanted to let you guys know that. What else did I have planned? I mean, that's all that I have planned. So right now, we're just sitting tight. We're just waiting for FOMC tomorrow. And again, the 50 basis point rate hike is priced in. Oh, look at that. What a reversal. Look at that. Yes, look at that. Very good. Very good indeed. We are in a slight profit now already. Trade is paying off already. All right, so hopefully this continues. We'll see what happens tomorrow. And again, we have our risk management levels. It's important, guys, to really make sure you manage your risk, okay? Follow your rules, manage your risk, exercise patience and discipline, okay? Whenever markets get this volatile, you want preservation of capital to be your number one priority, okay? So I've been, all these trades that I'm doing are relatively small in size. I'm legging in slowly. There's no need to act in haste, okay? So keep that in mind. Do not force a trade. Really exercise patience and discipline, okay? And manage your risk. Keep your losses small. Keep your winners running, okay? Anything else you guys want to look at? Anything else? Somebody on our social media is asking for gold. Gold, very good. Gold. I mean, I would expect gold to be up on this, right? Is gold up on this? Yeah, gold is really up on this, okay? I mean, I think we kind of missed a train here on GDX and our GDXJ trade. Although it does look like it's coming back down. I mean, this plan is still the same. I'm still looking for, I'm really going to take the cue from the dollar. If the dollar can get to this, 109 zone, I think that would probably cause us a pullback in some of these precious metals miners and the precious metals prices themselves. And that would probably be a good entry point. So if it makes that higher low as the dollar gets to 109, I think that would be a great entry for SILJ, the junior silver miners. And for the junior silver miners, I really want to get into some leaps. Some January, maybe 2025 leaps would be interesting if we can get it cheap enough, okay? That would be nice. And then we can aggressively sell poor man's covered calls against it. Okay, that's the plan. Anything else you guys want to look at? Going once, going twice. All right, then in that case, sold. That wraps up our session of the Morning Market Memo. Our Discord invitation link is in the description below. Come join our Discord, be a part of our growing community. There's no sub fees, no paywalls. It's all the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment. Show us some love, baby. All right, I'll be back on tomorrow, 30 minutes after the opening bell, 10 a.m. Eastern time. 30 minutes after the opening bell of the New York Stock Exchange. Trade safe, guys. I'll see you guys tomorrow.